Hey, this is Justin with DayTradeTheMarkets.com on November 8th, and I wanted to do a similar video to the one I did yesterday where we look at some multi-time frame analysis of a few markets. If you didn't see yesterday's videos, it's worth checking out. You can click on the link below and look at other videos. Went through in pretty good detail kind of the idea of using multi-time frames with this new edition of the software that we're releasing. So with that said, I'll look at the emini S&P today, and people were asking about the Russell, so I'll have a look at that, and then also the crude, because that's I don't trade the crude myself, but it seems like a pretty popular market at this time. So here is a 60-minute chart, kind of our swing trading chart, and what you can see on the chart right now is heading back to basically the end of July, and you can see that toward the end of July we went bullish and had a pretty nice rally. And if you were looking to swing trade, I mean, you can certainly find some pretty good swing trading opportunities here. But at this point, what's happened is the market's basically turned over on a bigger picture time frame, and you can see that we've gone bearish on our filter, and our support zone here, which had a nice bounce, 30-point bounce, has now turned over to red. And you can see yesterday and early today we tested into there between about 1395 and 1400, and we've since sold off about 25 points. So, you know, certainly a swing trading opportunity for one, but also, you know, a way that you can use this that I would recommend is to kind of give you a bit of a better handle, bigger picture that you can then drill down to on the shorter term time frame and find more precise trade entries. You know, even if you don't consider yourself a day trader, if you consider yourself a swing trader, or even a position trader, on the day that you're entering and exit the market, you're in essence a day trader. So you might as well, you know, do your best to hone in on the best trade location you can. So with that said, let's drill down to the 5-minute chart, and you can even go to a 30 or 15-minute chart, etc. But I'll just look at a 5-minute chart now of the ES. And you can see on this market today, early on, we had an attempted rally, this high velocity move and a level 2 buying aggression bar. We even had a full bar above that level 2 aggression bar, but you can see both of these bars decelerated, which is a bit of a heads up. With that said, you would expect the low of this high velocity move to act as some support in this green zone as well, and it did. It bounced 1.5 points or so, but you can see that when we did test this zone, we did so on a level 2 selling aggression bar, and then we had another level 2 selling aggression bar, and again we would expect the highs of these to hold, and you can see that this one did especially nicely. And we had some other, if you're looking to use the 5-minute chart to pinpoint your entries a bit, you know, we have our bigger picture bias, which is leaning down. Our shorter term bias with the filter here is leaning down. We've got this, you know, these bars that we would expect the highs to hold, so that's structural evidence. And then we've also got this red resistance zone, so it's a way to kind of pinpoint an entry at the 92 area as opposed to just kind of wildly getting into the market. So that's kind of an idea there. And you can see that we had, every time we would get selling structure, it would hold until this bar down here where this high did not hold. We even got a full bar above, so another, you know, possible exit strategy type of a thing. And you can see our filter changed as well. If we drill down a little bit further to, let's say, the 3-minute chart, it looks pretty similar in that we had an attempted move higher on this one was actually on a level 3 bar. Again, we would expect all things equal for that level 3 bar for that low to hold, and it didn't get, you know, bounced 1.5 points, but not much of a bounce. But again, we were kind of fighting the bigger picture bias, the bigger picture lean, and you can see that we then turned over. Filter turned over pretty good. We tested up into the red zone again around 92, and then sold off. And again, it wasn't until we had this level 3 bar on the low, which if we don't get follow through, and it's, you know, it's been a 20-point move at that point, it can often be capitulation. You know, if you've seen other videos, we talk about that as well. Now, if we drill down even further to the 1-minute chart, where you can really look for some entries. You can see a similar situation where, you know, attempted move higher on this high velocity move. The low of that doesn't really hold much at all. We turn over, the support turns into resistance, filter turns over. Then you can see that we test, you know, we have this high velocity move. We expect the high of that to hold, high of this to hold, the high of that high velocity move to hold. And you can see those all happen to also line up against some red resistance zones right in here. So certainly some pretty good edge in terms of pieces of evidence coming together to give you a pretty high probability place to be looking to get into the market. as well. So you can see there, in the shorter term, it's telling us, if you were able to get short, which I hope you would be able to, somewhere in here, when this filter turns over, you would certainly want to be getting out of your position, or at least getting out of the last part of your position that you have remaining. Okay, let's look at the Russell. Had a question about that today from somebody. We'll start again with the 60-minute, looking back toward, again, the end of July. And, again, if you're looking at this from a swing trading perspective, certainly some opportunities with that. You can see that if you're looking at it for help in determining kind of the bigger picture, you can see end of right here, beginning of August through basically the end of September, we were in a pretty, our filter's green, pretty nice up move. We turned over here toward the beginning of October. We've been essentially moving down since then. So that's, it can be handy in terms of helping you stay on the right side of the market day to day. We haven't quite tested up in the Russell to our red resistance zone from a swing trading perspective, but again, gives us a little bit of a lean heading into the day on the Russell. So we'll drill down again, go to the 5-minute chart here. This one has a little bit of yesterday because I didn't show the Russell yesterday, but again on the 5-minute you can see first major structure of the day was this level 3 selling aggression bar, which we had some follow through. Obviously then here's another high velocity move and a level 3 selling aggression bar. This one matches up where the high of this high velocity move, which we would expect to be resistance, also happens to be a red resistance zone. Filters down, bigger pictures down. We even decelerated here. So you can see that our filter's been pretty strongly down for the last 2 days or so. And in terms of today, we had an attempted move higher like you would expect when you look at the ES on this level 2 buying aggression bar. You can see we didn't get follow through. We didn't get a full bar above. When we did try to test above, it actually decelerated, and then when we took out its low, it did so on a level 2 selling aggression bar, and that high of that level 2 selling aggression bar held nicely. We even decelerated right there. So, pretty good opportunities, pretty clear. From we keep drilling down. The bears were pretty well in control here. Now, if we look at the 3-minute chart, just to keep it kind of consistent, similar in that. Rejection of the first move higher, continuation on the first major move lower, it turns over, same thing, rejection of the buying, strong buying, continuation off of strong selling. That's pretty much how it went. Then if we look at the 1-minute chart here, same type of idea where we had an attempted rally here early on, but then we had some high velocity moves made by sellers come in. We had bounces off of the green zone. Then our filter turns over. Unfortunately, we didn't get a test up into this red zone, which would have been certainly nice. But you can see that after we kind of broke lower, we're kind of in the vertical phase at this point. You can see our first major structure is this level 2 selling aggression bar. We would expect that high to hold. Certainly, I didn't trade the Russell, but that certainly is an opportunity that we would be looking for with that. And if you were able to get into a position here, filter turns over, we have some follow through on some major buying structure on the low of the day, some good opportunities to get out of a trade or to avoid getting into another short trade at a minimum. So a good decision aid certainly. Let's have a look at crude as well. Here is the bigger picture crude. Let me make that a little bit bigger. You can see going back to, this is early July, mid-July or so, basically bullish. We turned over here, and heading into the day we were mainly more bearish than bullish certainly. If we look then at the crude oil 5-minute chart, similar scenario in that we opened the day, our first major structure, our first bar of the day decelerated, then the first major structure was this level 3 selling aggression bar. We had some immediate follow through, so we would say that at least at that point bears are pretty well in control of the market. A little bit of mixed activity here with some buying activity, but then when we tested the high of this level 3 selling aggression bar, which also corresponded with this resistance zone, it held nicely. But certainly the market was showing you a little bit of mixed activity there. It wasn't a slam dunk, bears in control type of a thing. So that's good evidence to have in the crude. Now if we drill down to the 3-minute, looks pretty similar in that the first major structure of the day is this level 3 selling aggression bar. But again, you can see when this level 3 selling aggression bar didn't hold, and our zone hadn't turned over to red, which was nice. It didn't hold, and we actually had some buying coming in. So at that time, looks like it was certainly telling us there was some mixed activity at that point on the 3-minute. And if we drill down even further here to the 1-minute on the crude, similar type of a thing where first major structure of the day is this high velocity move made by sellers. Now this red zone here certainly would have been a nice entry opportunity, which absolutely didn't hold. So just goes to show you that not every trade opportunity is going to work out perfectly, nor should you expect it to, but you're just trying to take the evidence at hand and make the best sense of it that you can. And that's really the key. Trying to use the evidence that you can to make a better decision. If you can make better decisions, you're going to have better results. And that's at the end of the day what we are as traders. We're decision makers. And if you're a good decision maker, you get paid for it. If you're a bad decision maker, you lose money, obviously. So the key is to make better decisions over time. If you can just avoid a couple bad trades a month or get into a couple more good trades a month, you become a much better trader. So hopefully that makes, I won't go into a diatribe there, but hopefully that makes some sense. Just wanted to look at a few different markets, look at them from, kind of drill down from a longer term perspective to a shorter term perspective. So hopefully that makes sense. And if you have any questions at all, let us know. We'll be happy to answer them. Talk to you soon. Thanks.